Did you know the simple amount of change from your morning coffee is enough to kickstart your financial future? Have you ever looked at the coins from your morning coffee and seen them as pocket fillers, just some lint buddies? What if these small coins could be the seeds of your financial empire? You heard right. Every penny has the potential not just to grow, but to multiply beyond your wildest dreams. It's not merely about saving, but about multiplying your money, turning the overlooked into the cornerstone of your wealth. Welcome to the exhilarating world of micro-investing, where the barriers to entry crumble before the power of spare change. We're about to dive deep into how your coffee change and how to get some extra cash you didn't know you had. It can lay the foundation for an investment portfolio. Every cent is a building block to a richer tomorrow. Let's take your pocket lints, friend, into towering profits, unveiling strategies that unlock the vault of financial opportunity, accessible to all regardless of wallet size. Let's really see what it means to invest and uncover how your spare cash can work wonders for you. When was the last time you used that pocket change to make a difference for yourself? Investing isn't just for the wealthy or those well-versed in the stock market. Let me give you these easy tips for micro-investing. Use your spare change to get a foot in the door. Here's how to leverage these platforms to your advantage, transforming minimal amounts into a growing investment portfolio. Tip 1. Choosing the right micro-investing app. Not all micro-investing platforms are created equal. Look for apps that offer low fees, a user-friendly interface, and a variety of investment options. Some popular choices include Acorns, which rounds up your transactions to the nearest dollar and invests the difference, and Robinhood, known for its commission-free trades. Consider what matters most to you, such as ease of use or educational resources, and the ability to pick individual stocks once you are comfortable. Tip 2. Automating your investments. The key to building wealth is consistency. Many micro-investing apps offer features that automate the investment process, ensuring you regularly contribute without having to think about it. For instance, you can set up a recurring daily, weekly, or monthly investment from your bank account. Even small amounts like $5 a week can compound over time into significant savings. Here is an example of just $5 with no more contributions, compounding over 10 years at 5% interest, $8.14. It's not much, but what if you put in $20 every month? Now you have $3,026.84, and you only put in $2,405. Might not seem like a lot, but that's only 5%. What if it was higher? Now $80 a month after 10 years is $12,082.92. You see how the longer you invest, the more you will have. Tip 3. Understanding investment options. Micro-investing apps often provide a range of investment options, from individual stocks to exchange-traded funds, ETFs, that track the performance of specific indices or sectors. Beginners might prefer starting with ETFs or mutual funds, as they offer built-in diversification, reducing the risk compared to investing in single stocks. Take advantage of the educational resources offered by many platforms to better understand each option and make informed decisions. Micro-investing can be a powerful tool in your investment arsenal, proving that you don't need deep pockets to begin building wealth. Remember, the goal is to start small. Learn continuously and gradually increase your investment as you become more comfortable and financially capable. How can you invest without any money in your pockets? The path to investing doesn't always start with money. Sometimes it begins with the things you have around your home. Decluttering not only frees up space, but can also free up capital that you can invest. Here's how to turn your unwanted items into a source of investment funds. Trick 1. Identifying sellable items. Start by sorting through your belongings to identify items that could be sold. Focus on electronics, branded fashion, books, and collectibles, as these tend to have a higher resale value. Use apps like Declutter for electronics, Poshmark for clothing, and eBay to get an idea of how much your items might be worth. Remember, what seems outdated to you might be exactly what someone else is looking for. Trick 2. Once you've identified potential sellable items, it's time to list them online. Take clear, well-lit photos of each item from multiple angles and write detailed descriptions to attract buyers. Be honest about the condition of your items to avoid disputes with buyers. Use social media platforms local selling groups, and online marketplaces to reach a broader audience. Seasonality can affect sales, so consider the best time to sell certain items, like coats in autumn or electronics before the latest models are released. Bonus tip: take advantage of things like ChatGPT to help you write a description of your items for sale. If you don't know how to use it, you can ask it how you should use it and for what reason you are using it. It will give you ideas you hadn't thought of. Tip 4, it might be tempting to spend the proceeds. Instead, channel this money directly into your investments. Transfer the funds to your micro-investing account or into a separate savings account that's just for investing. This will turn your clutter into an asset, contributing to your financial goals. Consider setting a specific target for how much you want to raise through sales and keep track of your progress toward this goal. Selling your unused or unwanted items into investment capital, you're not only enhancing your living space but also making a savvy financial move. This method demonstrates that resources for starting your investment journey can be found in unlikely places. Remember to transform these one-time sales into a stepping stone for long-term financial growth. Extra funds for investment don't necessarily mean you need to earn more. Often, it's about managing what you already have more efficiently. Here are tips and tricks to carve out additional funds from your existing budget to grow your investments. Tip 5. Checking your spending. Start by looking into where your money goes every month. Utilize budgeting apps or a simple spreadsheet to track where your money goes each month. Look and see where you are overspending. Usual spending traps are eating out a lot, paying for subscriptions you hardly use like the gym, and shopping on a whim online. You don't have to stop spending on everything, just find and stop wasting money where you can. Tip 6. Take action to reduce or eliminate these costs. Cancel unused subscriptions and memberships. Challenge yourself to cook at home more often instead of dining out. Consider more affordable alternatives for services you use regularly, like switching to a less expensive gym or mobile plan. Every dollar saved is a dollar that can be directed toward your investments. Trick 3. Establishing an investment budget. With the money saved from cutting unnecessary expenses, create a separate budget for investments. This doesn't have to be a large sum, even small. Consistent contributions can make a sizable impact over time. Keep to a realistic amount you can commit to investing each month or week. Automate this process by setting up a direct transfer to your investment account, treating it like any other essential expense. This ensures that your investment fund grows steadily without requiring ongoing decisions to transfer funds. Over time, you'll hardly notice the money you're setting aside for investing, but when you see how much it has grown over the years, you'll be amazed and thrilled at your growing wealth and be glad you started. You're not just finding extra money to invest, you're also adopting healthier financial habits that can benefit you in all phases of your financial life. Learning to budget and cut out spending you don't need helps you a lot, not just with growing your savings, but also in reaching financial freedom and independence. The main point is that you don't have to wait for a big chunk of money to start investing. You can begin with what you already have. Ever heard, don't put all your eggs in one basket? That's super important in investing. It means spreading your money around to keep it safe and possibly grow it more. Even if you don't have a lot to start, I've got some easy tips and tricks to help you mix things up and make your money work harder. Let's get into how you can spread out your investments and avoid risky moves. Tip 7. The basics of diversification. The idea behind diversification is simple. Spread your investments across different assets so that a loss in one can be offset by gains in others. For beginners, this might mean choosing a mix of stocks, bonds, and other securities. Micro-investing apps often offer diversified fund options, such as ETFs, exchange-traded funds, which can provide instant diversification with a single purchase. This is an efficient way to achieve a balanced portfolio without needing to buy and manage many individual assets. Tip 8. Exploring low-cost index funds. Index funds are mutual funds or ETFs designed to follow or track the components of a market index, such as the S&P 500. They offer a form of passive investing with lower expense ratios than actively managed funds. For those new to investing, allocating part of your investment to index funds can be a cost-effective way to diversify. Since these funds mimic the performance of the market as a whole, they tend to offer a solid long-term investment with less risk than picking individual stocks. Trick 4, putting in money regularly. Dollar cost averaging means you keep investing a set amount of money regularly, no matter if the market is up or down. This way, you end up buying more when prices are cheap and less when they're expensive. It's a great way for beginners to invest without worrying about picking the perfect time to buy. Plus, many apps that help you invest small amounts can do this automatically for you, making it super simple to keep your investing steady. Mixing up your investments. It's super important to spread your money around different kinds of investments. This helps keep your money safer and grow steadily over time. By putting your money into different places, choosing affordable index funds, and regularly investing a set amount, you're building a solid base for your money's future. The main idea here isn't just to make the most money possible, though that's a nice bonus, but to make sure you're not caught off guard by market ups and downs. As you keep investing and learning, you'll get better and more confident at handling a mixed bag of investments. Starting your investment journey means it's time to really get to know how money works. Being smart about your finances helps you make better choices and understand the ups and downs of the market. Let's dive into how you can keep learning about investing, turning what you learn into smart moves. Tip 9, using free learning tools. The internet's full of free stuff to help you get smarter about money and investing. Check out trustworthy news sites, blogs about investing, and forums where people who know a lot about investing hang out. If you like watching more than reading, our YouTube channel helps break down investing in easy-to-understand ways. Also, lots of apps where you can start investing with a little bit of money have guides and tips just for beginners. Make it part of your routine to spend some time each week with our channel, Mandatory Money Matters. Trick 5, getting involved in investment groups. Talking and sharing with people who are also into investing can really speed up how much you learn. You can find groups of these people in investment clubs or online places like Reddit or other forums just for investing. These spots are great for asking questions, talking about what you've tried, and getting advice from others who invest too. Joining in on the chat helps you get a better handle on things and see all the different ways you can invest. Just remember, it's not about just doing what everyone else says. It's about listening, learning, and then make the best choices for yourself based on what you've learned. Keep learning and adapting. Investing isn't something you just do once and then ignore. You need to keep learning and changing your strategies as the market changes. Start with the basics, and as you get more comfortable, start learning about more complex stuff like reading market charts, making your investment mix even better, and figuring out how to save on taxes when you invest. Think about taking some online classes or going to workshops to get even smarter about investing. Learning is a powerful investment in itself. Using all the free advice out there, getting involved with groups of investors, and always looking to learn more don't just get you ready to handle the ups and downs of investing. It puts you on the road to lasting financial wins. Becoming smart about investing takes time. It's more like a long race than a quick dash. So settle in for the journey. Keep asking questions and enjoy watching both your know-how and your investments get bigger and better. Starting your adventure from turning small changes into significant earnings is much more than just scraping together extra cash or making clever investment choices. It's about completely changing how you see money, what you have, and the chances around you. By putting into action the advice we've shared, you're actively moving toward a future where you're more financially stable, all by making one little investment after another. We've dived into how micro-investing can transform your spare change into a blossoming investment, how cleaning out your space can reveal extra money for investing, and how smarter budgeting can unlock more cash for your financial dreams. Spreading out your investments and always learning more about finance are key moves for keeping and building your wealth for the future. Keep in mind that taking that first step is what counts the most. The size of your starting investment isn't the big deal here. What matters is your dedication to keep adding a little bit at a time and your openness to learn and tweak your approach along the way. Everyone's journey to growing their money and becoming financially independent is different, packed with valuable insights that go way beyond just numbers and graphs. We urge you to take the leap today. Start with one of the strategies we've highlighted and build from there. And this journey? it's just getting started. Dive deeper by exploring more of our videos, each packed with actionable tips and insights and inspiring stories. Your progress and stories of success are invaluable. Share them in the comments below. You never know who you'll inspire to begin their path to financial empowerment. Remember, this isn't the end. It's the very beginning of your adventure in financial mastery. If this video sparked something in you, don't stop here. Click on the next video right now to continue growing your financial wisdom. Together, let's transform our financial futures, turning everyday savings into extraordinary wealth. Here's to empower ourselves with knowledge, making savvy financial choices, and living the abundant life we all deserve. Don't forget to like, share, and subscribe for a world of financial insights at your fingertips. Your next step towards financial freedom is just one click away.